Hey, this is Sasha. Thanks for joining me in today's video. And today what I want to do is share with you some exponential moving averages and how to use those to find kind of like support or the movement of your stock, and also when to get out or take profits on a position. So stay tuned in this video. All right, so before we get started, I do want to share with you some insight. If you want to grab some freebies on the tradersfly.com website, go to the tradersfly.com, go to freebies. You can check that out. There's also some great resources, which I will share with you a coupon code in here in the resources for the program that I use for the charts, so the TC2000 charts. So this is the one I'm using. So let's kick things off and let's get started. So we're looking at moving averages, and these are the ones I have right now on there. It is the 8, 21, 34, 55, and 89. So I've got these moving averages. They're exponential. You could do simple, not a big deal. You might wonder, why did I choose those random numbers? It's really not random. It's actually Fibonacci numbers. There's also more numbers beyond that. You could go ahead and use additional numbers, but here, just to show you, it's really these standard Fibonacci numbers. Some people use the simple, some people use exponential, but it's based on the Fibonacci. You could even do numbers onto 144, 233, 377, and 610. Okay, I'll show you how they kind of work, give you some insight. Okay, so let's look at, let's say we're looking at a stock like Home Depot. Okay, so if I'm looking at Home Depot, what I'm looking for is kind of a clean cut support level. So once these swim lanes, as I like to call them, they're like swim lanes, you can see they're spread out like fingers, right? As this stock is swimming to the upside, it's doing fine, and it can come back to support at maybe the 21. Okay, so you could see then at some points when it pulls back, it may come back to the blue line. So for you, you could say, hey, I'm willing to give it more room, so I'll use the 34 moving average. Other people use kind of a deeper one, which they use a 55. So if you use a 55, you'd have kind of support at this level. If you use a 34, you'd use it here. So you're basically looking at kind of two bars that you're looking for it to go through, rather than just a single bar of touching. Because here, if we're looking at our moving average and it breaks below it, okay, what you're seeing is that, okay, that's one bar, but a second bar, if I was using 8, I'd be out. Now, if I was using the 21, there's kind of 2 bars right there, even 3, that it's under that bar, and now I'd say, okay, well, I'm out. If you were using the blue line, you'd be in it, okay? By the blue line, you'd have 2 bars under it, okay, you should be out. Now you're at the orange bar. Orange bar is your support. If orange bar is holding, you're okay. So that's how you could kind of use it. And if you have these nice swim lanes, you're fine. Now let's look at a time period when it looks a little messy. Okay, so here we had our swim lanes. We were moving. And what you'll notice is here we've had some rolling over problems or issues. So notice right here, we started to kind of roll over. There, let me back that up a little bit. So we started to kind of roll over a bit, and you can see it's hitting the 21, then the 34, then the orange one, so it's pretty quick. So you'd say, oh, okay, well, it's starting to get more messy here, and because it's getting more messy, you can see these lines are tighter, which means, hey, probably time to get out. Let's look at another stock example so you could get maybe some more insight here. Okay, so here, let's look at Zoom. Okay, so as I look into Zoom, let's just look at this breakout right here. So when we look at this breakout, you can see it's holding the 8, then we're using the 21 as support. Eventually we kind of get to the blue line, but it breaks that blue line and we get back to the orange line. So the orange line and blue line is kind of what's been trending here. So let's keep moving. You can see, okay, so there we still have our nice swim lanes. Then we've got the blue line, it's holding the blue line, and then we get back to the orange line. So the orange line is the 55. So you could see it's testing those levels. Now, where do you get out of it? Well, if you're using kind of the blue line as an out point, as a safety net, you probably would have been out at this point. If you're holding until they cross over and kind of the orange line, then what you'll do is, here's kind of, look, there's the orange line right there, but things are starting to get messy with the moving averages. And right here, we're getting messy. Look at how tight they are together. So this is kind of your out point is here. So you could have rode that whole trend right there because the swim lanes are open. And once you get tighter, then you're fine. When they're spread out, they're kind of safer. When they're tight, you're more at a problematic area. So that's how you could kind of look at these lines. You could do it for any stock, either to the upside or to the downside. Here's Procter & Gamble right here, starting to get a little messy on the short term, then it gets really messy, and then you'd probably be out for a little while till that trend kind of starts spreading out again. So, you know, so then you're looking, okay, well, is it spreading out again? So maybe right there, you're starting to get back into it. So it's just an idea for you guys with these moving averages, something to consider. I hope that helps, gives you some insight. Feel free to check out the freebies, grab a free option trading course or some other great freebies right here on the website. Coaching resources if you want to do one-on-one video sessions, and Start Here guide as well, along with some great video courses that are like 15 to 20 hours long, very detailed. Yes, they take time to go through, but they're very detailed. So thanks for joining me. Hope you got a lot out of it. And feel free to subscribe to the channel or check out some other great freebies. And I will see you in the next video.